What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to break down some very important information about SPY in the markets for next week. What I'm about to say in this video is going to be massive, so you need to watch this until the end. I'm also going to talk about something big about what the Fed is doing. So it's going to be very important for this upcoming week. I'm going to compare it to 2008 and talk about something big that's happening in the markets. Before I break anything down about all this information, before I do any research and say anything about what's happening, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Take none of this as financial advice. Also, don't forget to smash the like button. It not only benefits me, but it benefits the entire community as a whole. And finally, don't forget about the Moomoo link. The offer ends very soon. Put in $100 and you're guaranteed 5 free stocks plus $100 as a cash reward. But anyways, what is so big about the market? Well, let me first mention I'm going to use TradingView for this part. And when I use TradingView, I'm going to include the supply zones on SPY, the most important, most significant resistances, not necessarily all these smaller levels of resistance that I have like on my Webull account. I use this for like trading on a daily basis, scalping and things like that. But if you want a much like bigger and broader picture, you don't have to look at every individual resistance and support zone like this. You need to look at like the bigger supply and demand zones, and that's what this is for. So on SPY, I just have a couple of them. These are just the next couple of major resistance zones on SPY basically, and these are like the bigger supply zones, right? So I'm going to talk about this in context about of what's about to happen, and then talk about 2008 as well very soon. But first, let's talk about the markets. Let's talk about what's going on. So as you guys know, the market has been pumping for the last couple of months. Since October, the market's been on an uptrend. Specifically, since the start of this year, the market's been just ripping and ripping and ripping. Why is that happening? There are many reasons for it. The market is choosing to interpret news in certain ways. The market's approaching what it believes to be the Fed pause situation. It thinks it's getting closer to it. And then you always have to remember the options chain on SPY. Every week, or almost every week, we're seeing so many puts. So many people have been buying all these short positions, institutions too. They're shorting and shorting, betting the crash is coming, it's coming, it's coming. If everyone's betting on a crash, the odds of it happening are going down. Now, that does not mean it's impossible because it depends on the catalysts and the extent of this recession, but it's worth noting. And I just want to make it clear to everyone that you always have to watch for supply and demand zones and confirmation and etc. But let me just note that for this week, we have so many huge things coming that could trump the options chain for this week. And what's about to happen is going to cause a massive move. And I'm going to show you what that move could be on SPY. Now, what's happening for the week? Why is this week that's coming, or like next week, going to be so big? On Monday, June 12th, we have consumer inflationary expectations, which is very important for consumer outlooks. But then Tuesday, we have CPI coming out. That's going to be massive for the Fed's policies. Then for Wednesday, we have PPI coming out. That's the producer price index. That's also going to be massive for the Fed's policies. And then that same Wednesday, we have FOMC. We have the interest rate hike decision. And then we have the rate hike decision meeting. That's going to happen after that, the press conference with Jerome Powell. He's going to be speaking. And this is going to cause a huge, huge move for the markets. Now, why is this so huge? Because of the market's expectations. The stock market, okay, it's pumping like this because it believes Jerome Powell is about to announce the pause. The bonds market thinks so too. Now, if we get the pause, historically, the market will rally. And it's not just history that tells us that. It's also based off just, what's happening right now and the current trend in the market, current supply and demand zones, and current price action. If the Fed pauses, we are going to get a crazy bull run. The market's going to explode. Okay? If the Fed doesn't pause, if the Fed says we're going to, continue to raise rates, the market's going to get rug pulled. It's going to be pretty bad in the beginning. All right? I want to warn you guys about that well in advance. Now, what's going to dictate the Fed pausing or continuing to raise rates? So far, the data has been in favor of the Fed pausing, at least as of right now, but not all the data is out for at least you and me. Why do I say that? Because unemployment is starting to go up. We had a 3.7% unemployment compared to 3.4% from before. We're starting to see contraction in the jobs markets. we're continuing to see the economy slow down, more signals of it. And we're seeing the PMI reports, which are showing slowing in manufacturing and services and many other sectors in the US economy. But what's going to be even more impactful and more pivotal for the Fed's decision is going to be CPI and PPI. And those are all coming out for next week. If we get a very hot CPI report on Tuesday, the market is not going to like it. The market's going to get a rug pull and start pricing in another Fed rate hike, most likely. If it's very, very hot, well above the 4.9%, not 4.9, sorry, the 4.3% forecast, right? For example, if it's way too hot, market is going to get rug pulled. If it's a decent CPI, as expected, like 4.3%, very close to expectations or low, the Fed may announce they're going to skip on the rate hike. They're going to pause, and they may be open to another one in the future, like some of the Fed officials were saying, but they're going to pause, right? And just the act of them pausing has so much power over the markets, the banking sector, and the psychology of sentiment. And that's important because it's going to affect how the market moves. So basically, CPI and PPI are going to affect the Fed's monetary policy. By using open market operations, the Fed dictates how the economy is going to be sailing. And then if the Fed pauses, we could get a crazy rally. If the Fed doesn't pause, the market's going to see downside. So I'm going to break that down in just a couple of minutes. Let me break down the weekly chart now on SPY, and then talk about the crash some people are talking about, and also what happened when the Fed cut rates before. So I'm going to go all the way back to 2008. I want to show you guys something. So back 2008, okay, right here, we have these two vertical lines. The first one is when the Fed cut rates. The Fed started to cut rates back in 2006, actually. And you can see the market continued to, I'm sorry, not cut rates, they paused rates. I'm so sorry about that, guys. They paused rates right here on the left side right here. They paused the rate hikes and the market started ripping, basically. The market was very happy. Interest rate hikes were not going up, and we saw more economic growth, at least to some degree. But in the back end, there were a lot of sketchy things going on, which I'm not going to go into too many details about. We know what happened in 2008. And all these sketchy things were going on, and we started to see more and more of these individuals signing and using mortgage-backed securities to get more leverage, which they did not have the true credibility, and they weren't reaching every single one of the requirements for those particular assets. So what basically happened was all these defaults took place, and eventually we got this rug pull. The rug pull was already starting. Things were already really bad, and then the Fed started cutting rates. So all of this talk about how, when the Fed pivots, when the Fed cuts rates, the market crashes, that is not true, actually. Because the economy, the situation got worse, the economy went bad, things started breaking, the market started tanking, and then the Fed had to cut rates in response to that. You guys see what I'm saying? So could the market crash in the future? Next year, this year? It's possible, but we need a catalyst. We need like a credit crunch. We need something really big to happen. And so far, as of right now, we don't have the catalyst. We don't have it yet, right? In the eyes of the market. I'm not saying this based off an economics standpoint. I'm not saying this based off what these economists and analysts are saying. I'm saying this in the eyes of the stock market. The stock market corrected itself a bit because of the banking situation, but then that got cleared up, right? The banks got bailed out, basically. But there may be more pain for the banks coming in the future. But for now, as of right now, I'm not seeing it on the news. It's not coming out yet. So the point I'm making is the market's happy. The market's excited. The market thinks the Fed's going to pause. And the market's also rallying because of all of these puts. And the market's very greedy. So there's obviously a risk. But now let me break down these levels. And this is what's so big for so many people. And this is going to get a lot of people excited. But always remember to watch for confirmation and to remain objective. So which way is the market going to go? I'm going to switch to the daily charts on SPY. On the daily chart, let me just note that we're going to be waiting for something else that's super important. Now, we obviously have support and resistance levels below and above, but let me just note to everyone that you're going to be watching these levels carefully. These are the major resistance zones. These are supply zones up here, okay? If the Fed pauses, And let me actually close this so you guys can see this a little better. There you go. All right. If the Fed pauses, if the Fed actually announced that they're either skipping a rate hike or they're going to pause, and the market keeps ripping up like this, the SPY is going to rally all the way up to 440 to 442. There's not enough resistance to stop it. There's a lot of like free room for it to just fly, because the resistance from, like, for example, like, I don't know, 431, 435, 43, it's not as significant or nearly as significant as 440 to 442, this like zone right here. And we're going to see this thing fly probably closer to 442 if Powell announces some kind of pause. How is he going to do that? If we get a low inflation rate, if CPI is good, PPI is decent, it's very likely. And the market is saying there's a 71% chance it's going to happen. That's why the market is so excited. And it's all aligning with all these puts, all these people shorting the markets. So it's very likely that's going to happen. And if it breaks 442, the next major resistance is like closer to like 450. But we're not going to worry about that until we break this one first. Like I said before, we need confirmation. Now, hold on. That's not the only perspective. What if CPI is super hot? What if we get a very hot CPI that's closer to like 5%, 6% or something? I would say like 5% is more realistic, or like 5.5% or something. And PPI is kind of hot too. The Fed is going to be forced to continue to raise rates then. And what's going to happen is, if the news comes out on Tuesday that CPI is too hot, it's bad, what's going to happen is this is going to start dropping and this is going to start going up, meaning the market's going to start pricing in a 25 basis point rate hike more. And if the market starts to price this in a lot, if this bar starts going up a lot more and this one like drops enough, the Fed is more likely going to be giving us another 25 basis point rate hike. If we get another surge in inflation, it's possible. And there's a risk of it given what's happening with OPEC Plus, but not a guarantee. Maybe it's not going to be that bad. Who knows? I don't really know for sure. I can't promise anything. So that's why you have to be very careful. And also, this is not a guarantee that we're just going to, like, even if we do like rally really hard, we could always come down in the future if something else bad happens. Just wanted to make that clear. But I'm just talking about the reaction to what the Fed is doing. But anyways, if we get a hot CPI, if CPI is hot and the Fed says we're going to raise rates even more, market's going to get rug pulled. SPY is going to come down to fill this gap back into the 420s. Even lower than that, it could come down to the 410s. A big rug pull is going to come. Market's going to drop hard if we get a hot CPI and the Fed raises rates more. If the Fed announces the pauses here, we're going to see SPY rally very hard. But here's the beauty of it. This market is running on a very similar algorithm, because algorithms and robots are dictating the stock market. What does that mean? That means, okay, and this is what's happened for quite a while. It's not just that, it's also like buying pressure and other factors. But here's the bottom line. If we hypothetically see SPY rally to the moon, Tesla is going to rally to the moon too. Tesla's going to break into the 250s, get closer to 260. It's going to explode. QQQ is going to push very hard past 360 plus, right? AMC may be able to see more upside. Apple's going to pump. All these different stocks are going to explode and start rallying very hard. If Powell announces a pause and SPY starts to rally this hard, it's going to be dictated by these different stocks too. But what if we get a rug pull, and what if CPI is hot and the Fed raises the rate? If SPY starts tanking, SPX starts tanking, right? NASDAQ starts tanking, the entire market, everything is going to start tanking very hard, right? This is going to come down. 422 is going to be important. 420, we have like the 409 area. We have a lot of downside to come if that happens, if we get another rate hike. And then Tesla's going to come down too. It's going to start dropping pretty hard back to the 220s, get closer to 200, SPY is going to drop. Ford is going to drop. QQQ is going to drop pretty hard back to the 340s, if not lower. And the list goes on, right? Coinbase is going to drop. Apple is going to drop hard, and that's going to dictate the markets. NVIDIA, all these different stocks are going to be impacted by this. That's how huge this is. That's how huge the Fed and its policies are for the economy. That is why Jerome Powell is undoubtedly one of the most powerful men in the world, if you think about it. And that is why you have to watch these events very carefully. It's going to be huge. Now, on top of all of this, okay, I know I just named like a couple of the bigger things coming out for the week. After all of this madness, these are the biggest things I just named. For Thursday, we have some data from the Fed. And then for Friday, we have OPEX expirations, which means that's going to be pretty huge too. Basically, there are going to be a ton of options expiring on Friday of next week, a ton of them. We're talking about almost 2 million calls and close to 3.5 million puts. That's insane. 1.93 put to call ratio, so the majority of individuals and institutions are betting on the market dropping, and we're well above max pain. Market makers would probably want to see the market pump or at least hold these levels, but there's no guarantee because it's going to depend on the Fed. The Fed is powerful. Make sure you are ready for this and make sure you are prepared for this. So just to clarify, if we get something good from the Fed, market's going to explode. If the Fed does not give us what we want, market's going to get a big rug pull. And we're going to find out, we're going to get more information about this by Tuesday, but we're going to know with much more certainty by Wednesday. And just to go back to 2008, when the Fed pauses, the market tends to pump more. When the Fed pivots earlier than expected, which is what the bonds market is betting on the market doing, it's not always the thing that's causing the market to tank. It's just the Fed reacting to things breaking. What's breaking? There could be like a credit crunch. There could be, so many things that happen, with all these people and so much credit card debt, they may not always be able to continue to get into it. It could really suppress their spending abilities. I'm just, once again, going into the hypotheticals. So can the market crash if we do get some kind of big rally like this? Well, the first thing to remember is we have all these puts, so the odds are favoring the market makers trying to continue to pump the markets, but it is still possible for there to be a crash later on. Why? Because the effects of the recession could be more severe. We don't know the true severity yet, but we could find out later over the next few months going into next year. So I'm always open-minded to the possibility of us getting like a major correction or even some kind of crash. It's just that I don't have confirmation of it. I'm going to watch the next major levels first, right? So for example, why would we talk about the October lows when we're all the way up in the 400s? We're at 430 right now. We are $90 almost away from the October lows, $80 to $90. We're so far away from that. Why do we have to worry about that right now when we should worry about the next major levels, right? I'm not worried about that until we break below 426 first. Remember 426, how we kept holding that? That's the next like major level on SPY, the next major support. There's a demand zone right over there. That's the reason why I think it's very important to look at the market on a more precise scale. And it makes it easier to predict as well. It's very hard to predict what's going to happen in 6 months. I truly don't know everything that's going to go down. And it's very important to look at the data in this manner. So I hope this was clear to everyone. Big week next week. It's going to be huge. So please be ready and watch these levels very, very carefully. All right, guys, thank you all for listening. Have an absolutely spectacular weekend. Remain calm, cool, and collected. Do what you have to do. I'll see you guys in the next one. Market to the moon as the long term is still incredibly bright. And peace out.